Hey everyone, my name is William Leonard and I'm your host for today. This is the Virginia Startup Podcast. I'm really excited to welcome two awesome guests to kick off this amazing series where we start talking about the Virginia startup ecosystem. I've got Seda Goff, who is the founder and general partner of Flintlock Capital, and I'm also joined by Gene Riechers, who is a venture partner at Sands Capital Management. Seda and Gene, it's great to have you on this morning.
Great to be here.
Thank
Awesome.
you. Thank you for having us.
Yeah, of course. I I'm excited to kick off this series because the Valor team is really excited to be backed now by the state of Virginia through the VIPC Corporation partnership. And this is an exciting time for not only Valor, but also the state of Virginia and the ecosystem that's unfolding there. So, Seda, I would love to start with you and just talk a little bit more about Flintlock Capital, your focus, and in your journey from founder to funder.
Yeah, so Flintlock Capital, we are a venture capital firm focused on fintech. And as we look at fintech, we look at it more as a horizontal versus a vertical. So any type of technology that touches the financial sector, whether it's through financial institutions as a customer or their members, customers, and clients, to interact with money and to make financial decisions. And while I've been in the venture capital space for some time, this being my third fund I've GP'd, first under our new banner of Flintlock Capital. I started my journey as a tech founder back in, I was just doing the math, 13, 14 years ago in the DC space. And, the DC has it definitely looks different on both sides of the table, but it's also evolved significantly over that period of time. I really believe that not only the DC ecosystem that I built as a founder, but also the perspective of seeing a lot of companies in this area and just a lot of companies in general has afforded us our position and perspective for Flintlock Capital.
Love it. I love it. Gene, I'll turn it over to you now to share a little bit more about your background and the story of Sands Capital.
Sure. So my background personally, I moved to the DC area right out of college a very long time ago, and pretty quickly got involved with technology companies. I had a variety of roles in startups. I've been a CFO. I've run international sales. I've been a manager of a database products division of a larger company. I've Most of my experience has been in the software industry, some in the telecommunications industry. So I was fortunate to join a number of very successful companies and in a variety of roles. So I learned a lot along the way. And then about 25 plus years ago, I got involved in the venture industry and helped start two different venture capital firms, and invested out of four funds totaling about $600 million. I took a few years off from all that to be a high school lacrosse coach of all things, and then got back in the venture industry. And in 2019, when I joined Sands Capital. Sands is a large public equity asset manager in Arlington, Virginia, but they also have three very important private strategies. I'm part of the early stage technology team. I can tell you more later about what we do. We also have a life sciences investment group and a later stage tech investment group. In our group, we invest in AI, machine learning, healthcare IT, and data infrastructure, which is a broad label for how do you make all this stuff work underneath, databases and management systems for cloud computing and so on. So that's a quick story. We're investing right now of a $200 million fund.
Nice. No, Gene, I want to come back to you with this next question, and it's very relevant to what you just outlined. You've been operationally entrenched in the Virginia startup ecosystem for decades now, from holding operational roles with several startups from Reston to Arlington to Leesburg. I would love your viewpoint and perspective on how you've seen the Virginia startup ecosystem evolve over recent years, let's call it the last, 5 to 7 years or so. And maybe you can highlight a couple of the driving factors and forces for this growth that you've seen.
Sure. The Virginia ecosystem is sort of an affiliate, if you will, of the greater DC ecosystem. There's 5.5 million people in the DC area. There's 8.5 million in the state of Virginia. Those numbers overlap a little bit, of course. But the point of those numbers is there's a lot of talent in the region. It's easy for people outside the region to bucket this as a federal government oriented environment, but the federal government is a really important part of it, and it's important in part in building the technology community. But that's not all that's going on here. There are great universities in the state of Virginia, University of Virginia, Virginia Tech in Blacksburg, and now also in Arlington, Virginia, where Virginia Tech has built a new campus. George Mason University in Fairfax, Virginia. And all of these are great resources. But I think the larger story is that the tech community of Virginia and really Northern Virginia dates back to way before I got here, which is in the 1960s. There were tech companies that grew up somewhat related to the federal government, but other use cases. And the effect of that is there have been a couple of generations of management teams and executives produced. And so that just the sheer volume of talent in the area that's come out of all those companies over many years has allowed for the growth of new and better companies. And I think that's a key part of the story.
Seda, I'll pose the same question to you, but maybe from a slightly different lens, maybe from the founder to funder perspective. You mentioned you've been a founder starting back 13, 14 years ago, where you've now switched to the other side of the table, funding companies. Curious to hear your thoughts on how you've seen the ecosystem evolve from the founder and now the funder perspective as well.
I think that it's more than just evolved. I think it's almost has different phases to the ecosystem. It's funny. I had coffee with a friend of mine from this ecosystem, from 20 years ago, and he started his company based out of here in DC, and then moved out to the Bay Area, and recently sold it to Meta or Facebook, and now is in the VC world. He's also funder. And we were talking about just how things have changed. We have this very tight cohort of kind of ecosystem and friends from that time, where you saw companies like Living Social and some of these companies that grew really big, Urban Stems, and during that period of time, and everybody's kept in touch during that in that space. And as the ecosystem has grown significantly, it's not as tight knit, but it's a lot bigger. So I think, when I talk to new founders or new funders in this geographic area, I talk about, you need to find kind of your niche. You need to find your people. You need to find your room. And that will serve you across the board. Whether it's you're raising money as a founder, or you're trying to recruit new talent into your company, you are looking for customers, that comes from that ecosystem and that your people. And then on the funder side, I think one of the kind of amazing things that I get to take advantage of is this kind of 20 years of being in this space of deal flow comes from friends. Deal flow comes from other investors. Deal flow comes from other, previous portfolio companies. And that is kind of the highest tier of the deal flow pyramid, right? The top tier is always, your other investor friends, people that you trust, that you value their opinion, and you have like views on companies, and also people who have worked with you in the past. And then, you have that bottom of that pyramid of the cold calls. And that's those people that don't have those linked relationships with the people in their ecosystem. And I think Virginia is doing a good job through their university programs, both, while students are in school, as well as alumni programs and you know, uh, postgraduate type of stuff. And I think that that's what people need to find more of in this kind of bigger, the pond has gotten bigger. So it's now time to find, your rooms within that.
Yeah. No, I love those perspectives. And one thing that you both hit on, the common thread was talent, right? And the state of Virginia has an incredible and robust university ecosystem, UVA, Virginia Tech, VCU, George Mason. I'm certainly missing many others, but how are and how can Virginia startups address the challenges of, let's call it, attracting and retaining top talent, especially with the proximity and competitiveness to New York City, Boston. What's the quality of homegrown talent from the state, but also what are some ways that the quality of this talent can stay here in the Commonwealth of Virginia? And I'll pose that question to Gene first.
Sure. Well, I've got a few thoughts on that. First of all, I think I touched on this before, but I think the role of the federal government is actually an important part of the story. A lot of people think tech ecosystems grow up around universities, and there's certainly great examples of that around MIT and Stanford, to pick two obvious ones. But the federal government, if you think about what a university does, it attracts talent from elsewhere. It has laboratories. It has smart people engaging and interacting. It does research. Federal government does so much more of that than Stanford or MIT or whatever. Those are great institutions. Federal government, may not be quite as efficient, but they're a lot larger. And the effect of that is that there's a lot of people who came here from other parts of the country and other parts of the world to work in this area, in this geographic area, and then they go off and start their own company. And it's based on the scientific research they did, the ideas they developed, the experiences they had, the medicines they developed, whatever it may be. And a lot of the needs of the federal government are really cutting edge, frontier type needs, managing gigantic amounts of data, developing pharmaceuticals. It's unbelievable the amount of research that's going on in this area. So a starting point is we have a lot of people who are in this geographic area because of that. And that then allows them to do things like think about how to build large scale, distributed, complex, ultra reliable systems, because that's what the federal government needs in a lot of use cases. And that, so in terms of attracting people and keeping them here, Seda had a story about somebody who moved out to the Valley and obviously was successful there. I think those ecosystems, New York or Silicon Valley, are terrific places. There will never be another Silicon Valley. That's a special place and a remarkable place. But it's not, it has its own problems. It is unbelievably expensive to live there. Northern Virginia looks expensive until you consider New York and Silicon Valley. They are far more expensive. Silicon Valley has earthquakes. We don't have earthquakes to speak of.
Usually.
Yeah.
Usually, right. So all of California has public school quality issues. There's workforce loyalty issues in Silicon Valley. I'm not saying that you can't be successful in New York and Silicon Valley, but Northern Virginia and all of Virginia is a good place to live at, on a relative basis, lower costs. And there's all the talent here to build most kinds of companies. I'd say the one kind of company that I can think of where the talent isn't here is semiconductor design. That's not here. It's not New York. It's in California.
Yeah. And Seda, I'll pose the same question to you. Just curious to hear your thoughts on maybe some of Gene's thoughts as well in terms of the role of federal government, but also just the quality of life and things that you can get living in the Commonwealth of Virginia versus New York City, San Francisco, LA.
It's funny, like no longer is the persona of a startup founder that kid in his parents' basement with his hoodie on coding. Like that's no longer the typical persona. I feel like in general there's probably statistics around this somewhere, that you're looking at, late third, mid to late 30s, that started a company, and to Gene's point, they have a family. They're probably married with young kids, and that's a different quality of life that they're looking for. And it's a different things that is like that baseline need that they need to meet as they grow a business. And and in this area also, you're looking at a lot of dual income families where the spouse is equal in their financial contribution to the home, which allows for opportunities in entrepreneurship across the board, whether it's VC backable businesses or small businesses. That gives that family those that baseline needs met, whether it be education, house, cars, vacations, to be able to be of the right mindset to go after being a founder or an entrepreneur. Again, VC backable or small business. And without those, I mean, starting a business is like playing a sport, which, by the way, lacrosse is my sport too. I'm sitting in front of a huge pile of lacrosse medals because I have to do that for my daughter's lacrosse team that I coach for their end of the season. So yay, lacrosse. Apparently lacrosse is the sport for VCs. So but having all these things, you're going out to play a sport. You need to be mentally ready, physically ready. It's a haul, it's a grind. And if you don't have, if you're constantly worrying about things in your head, or you're out on this limb by yourself, it's hard. It gets harder. When we look at companies, we're in the, Series A, earlier stage companies, we're evaluating the founder as much as we are evaluating the widget or the market that they're going after, because they could have the best idea in the world and they are going after the best market in the world. But I'm sure Gene can attest to this too, is like, how many times have you seen something you're like, but you're the wrong person to do this? Because they're either burned out, they're stressed, they're whatever is going on in their life affects their ability to be successful. And to have, we have all of our seasons here, right? We get this more holistic life here, that I think can, to Gene's point, is a little bit easier than being in New York and Silicon Valley. But how quickly can we get up to New York if we need to? It's a train ride away, right. And we go to, as a firm, we're in, the Silicon Valley area and the Bay Area almost on a quarterly basis, if not both of them in the same quarter on a regular basis. And just because it's easy. And so we get the best of both worlds. And then on the federal government side, what I found was really interesting as I've gone to different, Chicago being another, or Boston, our level of understanding of our federal resources for startups and how to evaluate them as a VC or how to take advantage of them as a founder is well beyond most of the time what other people have an understanding of, whether it be understanding SIBR and SITR, even, knowing what that means as a VC. Like, that's not revenue, my friends. I'm telling everybody who's listening. But those are very valuable assets. And then as a founder, when is the right time to go after those assets and how to get them? It's not just I raise my hand and I get them. There's a process. And being able to, understand that and be able to have the resources and the help around you. And I know Virginia and the BIPC program does a really good job of a lot of webinars and resources to help founders and startups with those type of programs. And then also, if you are going to go after the federal government as a client, that's a whole nother ballgame to really understand. And going back to network, people, that is just as much network as getting any customer. It's how are you going to get kind of your sponsoring champion? Do you know somebody within, do you understand the contracting process? Do you understand what contracting officers are looking for? And are there resources or partners that are in your backyard that you can, primes that you can partner with to get into contracts that, hey, they're looking for my widget to put on a contract and I can come in as a subcontractor. Or there might be some 8A, type of opportunity for me with the large primes. Virginia does a very good job of this, of the small disabled veteran owned businesses and being able to show what are the pathways for growth in there, especially in like health IT. And your NIH is in our backyard. We have tons of federal contracts that are based here.
Right.
They even if they the execution of it might be in different locations around the country, most contracts are based here. So I think depending on what you're building, and I've always said this, depending on your widget, depending on your market, you pick a part of the country that it makes the most sense. They're hunting, there's parts of Alabama that make sense. There's Chicago that makes sense. There's Boston, but DC has kind of a little bit of everything. And all those big companies, and this is kind of the last point I'll make, all those big companies, whether it be Google, Facebook, all the Silicon Valley, tend to have offices in the DC area as well. They have government relation offices. They have staff here. So there's ways to get that network as well by just being here.
Yeah. No, I think we could have a whole podcast episode just around resources, programming, go to market, and targeting customers in the Virginia, DC, Maryland area as a whole. But no, I really appreciate that context and the insight that you both shared there. And Gene, I'll pose this next question to you, which is a little bit more startup oriented, right? What It wouldn't be a podcast around startups in 2024 without talking about AI. So, I want to get your thoughts, Gene, around what sectors amongst the Virginia startups do you think will see the fastest growth and scale as a result of this AI platform shift? I mean, there's a lot of healthcare, there's a lot of defense tech, aviation, dual use, fintech. Curious to hear maybe some of the segments and areas that you and the Sands Capital team are focused on relative to AI.
Sure. We have made, I think, 8 or 9 AI investments. We made, I think, 7 before ChatGPT arrived. So we've been at this for a while, relatively. And the things that we've learned over time are, they're national, it's not international trends, but they're also trends for the region, is that for a startup company, people aren't going to go out and raise the kind of money that OpenAI has raised, insert other names. What you've got to do is, and it goes to a point that Seda made earlier, is you got to go find your particular niche, your area to focus in. And what we see are solutions that are specifically targeted towards, it could be a horizontal need like AI governance, or it could be a vertical need like focusing on crime and theft and financial institutions. So and there's many more examples, but you got to find something to focus in on, and odds are good that you will succeed. You are more likely to succeed in that, in my mind, if you come at it as an expert in that industry, not necessarily an expert in AI. The generic or generalist AI expert who then chooses to focus on a complex industry, I think we'll have a challenge in figuring it out and recruiting enough talent to build a company around it. I think it's better to take generalist AI skills, but to apply it to a very specific industry or horizontal solution. And I think I know that's happening in Virginia. And as a specific example I touched on earlier, Virginia Tech, in conjunction, Amazon several years ago chose Arlington, Virginia as as what they call HQ2, their second headquarters in the U.S. And one of the things that happened as a result of that was Virginia Tech built another campus basically across the street for the purpose of primarily producing computer science grads. They're focused initially on graduate degrees in computer science. But that's an example where there's a lot of AI talent being developed that will help build companies and help start companies.
Yeah, I think you hit on an interesting point there, and something that we're constantly thinking about as a fund at Valor is just around, a domain specific founder building an AI application on top of their domain expertise and knowledge, and bringing in maybe an AI driven CTO or COO or partner to help scale that company. And I think that's a whole nother conversation in itself around
Sure.
building teams today in the modern world of AI. But Seda, curious to hear your thoughts there as well around you're specifically in the world of fintech, and you mentioned you all see fintech as a horizontal lens instead of a vertical lens. Curious to hear how you all are thinking about AI technologies relative to fintech, and also Virginia startups building those companies.
So I'm going to sound in the beginning like I'm a bit of a contrarian, but trust as we go through the go
There's
through my
nothing wrong,
process in
there's
my
nothing
head.
wrong with that either. Nothing wrong with being
So pulling it back, a startup is a company that's formed to solve a problem that has a high pain point for a specific set of people that have that problem, customers, people, not companies, people that have that problem. And these companies are build a solution to solve that high pain point problem that costs less than somebody is willing to pay for it, right? And there's a lot of people willing to pay for that solution. Now, that is a startup. That is a company. Now, if AI is the best way to build the solution that solves that pain point, then that's great. Then that's, that there's a kind of force multiplier in being able to, churn data, to look at multiple data sets all, in a very quick period of time. It's the delivery of that product. But if that initial pain point does not exist, then, it's almost a solution in search of a problem, right? And the way people look at AI, and it's not usually the funders, it's usually the founders, is, oh, I've got this really cool thing that I can do with AI, so I'm going to be an AI tech founder. But it's nobody stays up, no customers stay up late at night being like, oh my gosh, I wish I had AI. If I, I'm going to get fired if I don't figure out how to get AI in my company. Nobody does that. There's, they might be sitting up late at night worried about compliance for their, financial institution, like theft or something. That's what they stay up late at night worrying about. Or the number of patients that are coming through a healthcare system, and the number of, let's say, x-rays that need to get reviewed on a day-to-day basis. Is there an AI solution that can, that can help that quicker? Yes, there are. But nobody says, oh my gosh, I need AI to review my x-rays. They say, I have a backlog of patients and not enough staff to be able to get to all of them. Not enough, radiology techs or whatever. So it's, when we're looking at AI, I think that there's a lot of applications, but what sometimes I see are these AI companies that end up being more of a spot solution. So they, as opposed to something that's going to grow to the scale of being truly venture backable. And usually the companies that are truly venture backable are solving a pain point or a problem that then has like cascading network effect to then be able to, you solve that very tight pain, and then you're like, and I can do this for you, and I can do this, and I can bring this in, and it creates that network effect of a single entry point and then growing from there. And so I look at AI as not necessarily the end all be all. We love AI companies, don't get me wrong, but how it's more, is the problem you're solving such a high pain point that your customer acquisition cost is low, your time to close per contract is low, you have a growing ability to grow your market over multiple let's say industries or segments as you move, you have your beachhead and as you move through. That's really where, some of these AI, machine learning, I mean, none of this is really new per se, but we've gotten more elegant, companies have gotten more elegant and streamlined on being able to include this as part of their solution to have the most robust offering um, to solve the problem of their customers. So I think that there's a ton of different applications in the, and I think also as the regulatory side starts to get figured out, we're seeing a lot of, the chat GPTs and all these different companies that are on that kind of the forefront of creating these AI systems and algorithms. They're getting combed through. I'm not going to say they're getting slammed. They're getting combed through, and something's going to shake out of that, right? And it's funny, that's, I would even say that's another benefit of being in this area is, I grew up here. I've lived in this area. I mean, I went away to college and then came back for grad school. And like I have had so many friends and people in my world work on the Hill, work, run for Congress and work in different aspects of the government. So, this is a great place to keep your finger on the pulse of what's going on by just talking to your neighbors and your friends. And nowhere else. I mean, sometimes you go out to different parts of the country and they don't even know what's going, not that I have C-SPAN on, don't get me wrong. Unless like it's super interesting. Like I don't sit there and watch it all day, but I have a better understanding from being from here, growing up here, both as a career at, as well as, throughout my life.
Yeah. And I wouldn't
What
say,
one of just to add something about AI, one of the challenges of this, I'm sure Seda sees this also, is it is changing so crazy fast that you can fall in love with a particular investment concept, company, person, whatever, and 4 weeks later they're obsolete. And they were only invented 4 weeks before that. It is crazy how fast things are changing. And so you've got to be aware of that and be thoughtful about that as you think about hiring a person, investing in a company, joining a company, whatever, because you've got to figure out whether or not this, a reasonable chance of being a winner, or it's this roadkill in a month.
yep.
Usually it used to take longer than that.
Yeah, no, Gene, that's a great point. I
What
mean,
can I make one additional point to that,
yeah, go ahead.
specifically related to fintech? Is so there's a lot of different companies out there that are looking at payment platforms, loan origination systems, those type of kind of loan side fintech. And with the financial institutions in the market being, most financial institutions are capital concentrated against loans, given what was happening in 2021 and 2022 and into 2023. So there's a bit of a pause on loans. And so you have these great, to your point, Gene, these great technologies that are great today, but they're not going to get the customer penetration that they need because the pain point doesn't exist. Will the pain point come back? Absolutely. Like the market, the loan world is going to open back up. But by the time that happens, will that one company be able to weather this and continue to develop and get better during this lull period? Or will somebody come and leapfrog right over them with the next big tech? So, and as a VC, like I encourage folks, like keep track of what's going on, but make sure that you're never on the eight ball. Like you're always ahead of the eight ball on everything, even when you're in a lull.
Yeah, no, those are great points. And I think a recent example of, this instance of a technology maybe being DOA is Google and Perplexity, with Google now announcing, their own AI generated search results. And I think it's an interesting example to see how capital gets stuffed into a company and it's called the Google killer or whatever it may be. But, Google already has the resources to come in and they're probably already building what this company is building. They're sitting back, watching, using the product, understanding, the corners and angles that they can be better from a product delivery standpoint. So I think, Gene, you hit on the point of, as talent is out scoping careers at these AI companies, man, you really have to assess the founding team and their vision for building a product, and how quickly are they shipping product? How quickly are they iterating? How quickly are they able to, build new products, deliver them, and continue to grow their value as an AI platform, because things are so dynamic, changing on a daily basis. And then say that you hit on the nail on the head there, and it's about staying up to date and staying abreast of what's happening in AI, and not only staying up to date, but seeing around corners. That's the way that you can
Like,
outpace whatever your competition may be doing. So those are all great, great, awesome talking points there for us. So, as we wrap up this conversation, just from a macro perspective, Gene, I'll ask you first, how can Virginia startups today best position themselves to go out and fundraise in this market? I think the market is improving. I think volume is down, but round sizes are holding steady across the early stage for the most part. How can founders best position themselves to raise capital in this constrained environment today?
Yeah. So to take a step back, if somebody's listening to this and they're new to the idea of raising venture capital, you should understand that we, as William alluded to, are in sort of a, to put a nice word on it, a lull, where VCs are less interested and less capable of funding companies. That doesn't mean they don't fund any, and obviously a lot of money has been pouring into AI specifically. But there's a variety of structural reasons related to who are the limited partners, meaning the investors into venture funds, and how venture funds are allocating their capital. And there's a lot of forces that we won't spend time on here today, but it's a harder time to raise money. And so there's a couple pieces of advice. One is, if you are going to go raise money, get advice from people who've done it before, get them to review your presentation, review your business plan, how you talk about your business, and so on. Secondly, to Seda's earlier point, get introductions to funding sources. We as VCs get contacted by a lot of people. We are most likely to respond, and we do respond to people that we know who send us deals and opportunities, because we want them to keep sending us those. And if we don't respond, they won't. So that's how our little ecosystem works in part. So get introductions as opposed to a cold call or email into a venture capital investor. The best advice I can give somebody right now, sounds counterproductive, but is don't raise money. Meaning, can you make more progress on your own or with a very small amount of money that you might raise from family or friends, to make a little more progress than somebody might have done a few years ago to raise venture capital, so you have more proof points? That will make it easier to raise money. If you are, I've invested in a number of zero revenue companies in my life, and I'm comfortable with that. A lot of VCs aren't. So they'll have thresholds. We want to see at least $1 million in revenues or whatever. If you have more proof points, a handful of customers, a few 100,000 to a few million in revenues and so on, you will be better off in the process of raising money, because there's just fewer VCs investing fewer dollars right now. That will change, and it may change by later this year or next year. But at this moment, if you can avoid raising money, I'd avoid raising money.
Yeah, say that.
And just to add to that, one way to avoid raising money is to get your customers to pay for it. You have a relationship with one company that could give you some money up front on a contract basis to build something that you can turn into a product subsequently. That's an example.
Yeah, we've seen founders do that and get creative with how you're invoicing customers to help your revenue fund your journey instead of going out and spending time fundraising. So,
Absolutely.
yep. Seda, I'll pose the same question to you.
I agree with everything Gene said, so I'm not going to say it again. The only thing that I will add is kind of even on the front end of that is, not most companies are not venture backable. and that's okay. We have a very specific model. And we need to have companies that feed into our business model. So if your company doesn't have like a triple, triple, double, double, like double, triple, whatever, I've heard 1,000 different ways of saying that, of revenue. And when we look at companies, we're like, okay, do you have a pathway to 100 million in revenue? What is that pathway? Where you are most likely to exit even before you get to that point? And what is it going to take money, resources, and time wise to get there? And sometimes it's a thought experiment. And I've had founders say, well, I feel like I'm just making stuff up. And I'm like, you are. That's the point. But your value as a founder is how close your making stuff up is to the real thing. And that's where we're evaluating whether your ability, whether from past experience, network, or you're a serial founder, your ability to kind of do those things. And if you're not venture backable, again, that's okay. There's, loan programs, SBA loan programs, there's friends and family raises. There's a lot of ways to get what you need, whether through revenue or through loans or whatnot, to get to a point. And you can have a very successful life and have a lot of wealth by having a large small business. And the way that the U.S. government, defines a small business is pretty broad, in terms of number of employees and revenue and whatnot. So venture backable is just a subset of all of the businesses. And one thing that I always leave with is, Gene and I are sitting here all day, every day, learning the business model of every company that comes and pitches us. We sit there and we figure it out. We understand it. I encourage founders, take 1 second and understand our business model. Learn how we make money, because we are a business as well. We don't do this out of the kindness of our hearts and philanthropy. It feeds into our business. And there are great resources out there and great books. The one that I like the most is Secrets of Sand Hill Road. You probably have it somewhere, by Scott Kapoor, out of A16Z. And it goes through the math. And if you understand what we're looking for to make our math work, you will be able to present to us your value as a company to our business model. And you get to only learn one business model. We have to sit there and learn 20 to 30 a day. So it does, take 1 second to learn the VC business model. And also you'll understand quickly if this is a fit for you or not, and a fit for your company.
Yeah.
I think those are two great observations by Seda. And just to emphasize the first one about 99 point something percent of businesses, startups, do not raise venture capital. And that's just fine. And I know lots of people have owned, you wind up owning 100% of a company, that's probably okay. I think that can be a great path to success. And I don't know if the statistic is still true, but a book came out several years ago that analyzed how Americans had accumulated wealth in their lives. And the industry that produced the most millionaires in America, at least at that moment, was dry cleaning. Not something anybody would guess. So there's a lot of ways to make money, but that dry cleaning had produced more millionaires than technology or anything else.
Wow. Well, Gene and Seda, this has been a incredible conversation for our audience, and I think this is a great place to wrap here. So really appreciate your time sharing more about Sands Capital, Flintlock Capital, and giving the founders who are listening tactical advice around how to grow and think about building their companies specifically in Virginia. So really appreciate your time today.